Good evening, everybody. This is Jeff Scott. Welcome to this week's edition of the Top-Down Review with HGSI. Sunday, May 12th, 2013, being done approximately 5:30 p.m. Happy Mother's Day to you and your wives, mothers, grandmothers, daughters. This will be hopefully a short session, no more than 45 minutes, or else my Mother's Day bride here will not be happy with me. Title today, Melt Up. Clearly this market seems to be a momentum that's nonstop. That is until it stops. Disclaimer, this is for educational purposes only. Anything I recommend is in the spirit of education, not investment advice. I'm a doctor, not a broker. Most physicians lose money with their investments, and I'm not affiliated with any software vendor or trading company. Tools I demonstrate are those that I use in my daily trading. I pay for all the tools that I use. I use a lot of tools. I need some to trade the market real time, and I use both TradeStation or Thinkorswim. For analysis, I don't think there's anything better than HGSI, also called highgrowthstockinvestor.com or highgrowthstock.com. EdgeRater is is a backtesting program. I use Magenta Trader for seasonal analysis. Their version 2 seems to be working nicely with the bugs being eliminated daily. And then I follow Ian Woodward and Ron Brown and a number of the different things, their paid newsletters and market updates and their free weekend reviews and blogs. Not to spend any time here because I do this every time, but I am influenced by a number of folks, many of which are on this page, with websites and some of their key books. Be your own guru is what I would learn from Ian, and I would recommend the same to you. Learn how to trade and trade what you learn, and pick the style you want from those that you think are good teachers and know what they're doing. I talk a lot about buy lists and setups. To me, we're identifying tonight are setups, stocks that look like they're setting up to be interesting from a long or short purchase perspective, but I don't know what the market will be doing tomorrow, and anything I do will be dictated by where the market is going. As a top-down investor, what matters to me most is the market, then the best sectors, and then the best stocks in the best sectors. Right now, being a top-down investor has been a way to make a lot of money. As usual, I will start with my take on the market, and then go through industries and stocks, look at some shortcuts, and then perhaps use some of the other programs we have. I always come back to this picture because it really matters to me as to where are we in this setup. And I think it's a very interesting question because I keep thinking we're here and rolling over, and really what we're doing is here and going up, here and going back. And as we've talked about, we've had over a 20% rise from the bottom with nary more than 3% pullback since November. Where we are matters because if we are still in an uptrend, then I want to be buying all these pullbacks in the market in my stocks. In a downtrend, I want to be shorting retracements. Not a whole lot of these in the market right now. The market looks like this, and this is the proverbial Darvis box on a trendless market. Ian on the left, Ron on the right are the secret weapons of HGSI, and if you don't know who they are, you're missing out on some great teachings. Real quickly, the website, highgrowthstock.com, is right here. Free trial for 30 days. On the trial, under support, under Learning Center, are a number of PDFs to get started and some movies. You need to go to the add-ons and download the pieces that are here, and to make your software look like mine or almost look like mine. Under reports are Ron Brown's free weekend reports, which he does most weekends when he's not out sailing or some other fun thing. And then mine are here as well, and they're there going back for both of us quite some time. Sometimes it makes it easier to learn how to use the program by watching people that allegedly know what they're doing, how they navigate through it. Ian writes a wonderful blog. I haven't seen a note that it's a new one come out today. He'll probably have one tonight, and it's one of the great, that and the Ron's reports are some of the nice freebies. Don't seem to be getting his blog very easy here. Maybe that means there's one coming out tonight. Maybe he's updating it now. Here's from May 4th. And basically the market keeps, as I said, melting up, and I would expect, knowing Ian, that he'll have another blog out sometime tonight or tomorrow. There's the website, and party message before I jump into the market: be your own guru. Investing is a business. Make sure you have the right employees, which to me are tools and software. Keep your education going and trade the market we have, not the one you think we should have. In a previous one, I think 2 weeks ago, I did a lengthy program that spent a lot of time on instruction. Today I'm going to be flying through analysis, not instruction. And on that, I went through what each of the color bars are and the different things on my typical charts. A couple of people want to know why they don't have the red candle highs and the green candle lows yet. And I could tell you I got a message today from George. I think he's getting very close to a new release, and a new release that will do a lot of great things, not only add some indicators that I use and some counters indicators, but also shorten the update cycle and the calculation of new indexes. I like to have the kitchen sink, so I have my momentum indicators, Bongo and Force on the top. I have the high jump in here in the green line with red and green candle highs on top of it. Morales and Catcher Bible gap ups, DI crossovers, pocket pivots up and pocket pivots down. 8-day exponential in magenta. Green is 17-day simple. Blue is 50-day simple. Red is 200-day simple. Eurekas and Phoenixes are your exuberance in the general market, and Kahuna's momentum indicator in the individual stock or equity, or index sector, etc. So that's basically the story. Let's go and let's start to look at some charts. I also like to look early on about what's going on in the market. So I have put together a file today, and let's see if I can find it. It's on my desktop. And it looks at that group performance analysis, which I like to do every weekend. And it gives me an idea of how our stocks did compared to the market as a whole, plus a little bit of an idea of what the market is doing. So these are assuming these groups were purchased on May 3rd and sold on May 10th. So it's 7-day performance. All these are groups that I looked at last weekend, many of which are groups that I alluded to on the last call. The only group that changes in character over the week would be my current holdings, but I don't update the group. And so when I see a number here like up 2.44%, that's a damn good week for anybody, but it may not have been as good or as bad because I change a lot of those equities as the week goes. And my performance more likely is based upon my buy watch, and you can see of the 36 stocks that I liked, 32 of them went up for 3.2%. And we did go through most of those at the end of last week, and I'll do it again this week of this week's buys. So when I looked at the market itself, it was up 1.19% on the S&P 500, another very robust and strong week. Only one of my groups was down. Now, some of my groups are bearish, so that means even the lousy groups were up. Interestingly, green candle lows, of which there were only 4, although 3-to-1 positive, they must have had one bad negative because they had a big underperformance week. What was leading, once again, as usual on a positive week, what led the week before leads this week with the best of Woodward and Brown up at the top, up over 7%. Viable gap ups from Morales and Catcher, they're working, up 4.25%. The IBD 50 and HGS 100 up both over 3%. My GIF All Stars, which is a simple way of finding the best stocks, 21 to 8 positives, 3.22. As I said, my buy watch up about 3.2. When I look at my types of buys, pullbacks waiting for signals were the lead performer. Breakout EPS All Stars, of which there were 8 of them, was actually the laggard. That's kind of interesting. Let's take a look at them and see if it must have been something that did well. Perion pulled back. You know, really looking at these, nothing did bad, but nothing did well either. So it was kind of a flat group for the week comparatively. Some of the better stocks for the week on the buy list that we looked at, Dresser Rand up 10%, Immersion Corporation up 10.8%. Santeris, interesting, we'll talk more about it, was up 6.97%. Louisiana Pacific up nearly 8%. United Rentals, one of my favorite stocks, up 7%, were some of the leaders that I had looked at last week. Berry Plastics up 5.6%, not too much. So and I had no bottom fishing stocks last week. So things, you can see the leaders were those identified. Pullback waiting for signal to me are stocks that have been in an uptrend, have pulled back to a major moving average, and I don't buy them until I see something kick in like a Kahuna, a pocket pivot, a viable gap up, huge volume, a bullish candlestick, etc. The pullbacks ready to run would be the same stocks that got an extra signal that I mentioned. You can see they were up 3%, 8-to-1 positive. So a very bullish week. All right. I like to look at TradeStation, and let's go into Elder, and let's take a look. This was one of my favorites of the week, one of my holdings. I got into around 10 at the beginning of the year, WCRX, but that's for another story. It's hopefully going to be a buyout because it's flying up. I like to look at, just to get a sense of the market, I want to see mostly green on the indices from a Elder impulse indicator. Green is a buy, red is a sell, blue can be a buy or a sell, and green you don't have to buy, you can also hold. And what you could see, and the most important thing here is we've now broken the MACD divergence problem that we were having. And when I talk about that is I had been looking at the fact that every time, I'll get rid of this thing, we had made new highs, we had less and less on the MACD histogram and on the MACD line. But as I talked about last week, we've now taken out the previous highs on the MACD histogram and the line. There's no longer a MACD divergence here, and we are green on the NASDAQ and all three. The Dow, and you can see they're all going to be tracking up at the upper envelope. Here's the Dow coming soon. Looks just like the NASDAQ. Here it is. Come back a little bit off the top. It's blue, but near the top. Green and green on the weekly and monthly. And not quite taken out the prior highs, but compared to where we were the last time, we're starting to have higher MACD histograms and the lines. And then the S&P 500, as we can see here, like the Dow, going sideways the last couple of days in blue, green on the weekly, green on the monthly, and it too taking out the descending peaks of the MACD histogram with this rally. So I like it. I think that to me is a much more bullish signal than we've seen over the last couple of weeks. If I go into the market itself, open up my warehouse view, and go into user groups, major markets plus, top down. So I look at not just the last couple of days, but really 2 or 3 weeks worth of movement. The small caps, which were laggards, are now leaders. And you can see the small caps in the NASDAQ. Now, high growth stocks are often small caps, so not a big shocker to me that my portfolio is doing as well. I'm sure yours are if you're high growth stock investors. The NYSE is a mixture of big and small, and you can see so the 600, the 2000, the NYSE, and the NASDAQ are all up near the top. At the bottom, the bonds, volatility, silver and gold still suck, as do commodities, and most of the commodity problem is because there's been some strength in the dollar. Over 5 days, transport, small caps, and mid caps, weakness in the utilities, volatility, bonds, silver, gold, commodities, oil sort of flat for the week. 1 day performance, the big loser, volatility, and bonds, and gold, and gas. There was really no gigantic winner. Nothing up over 1%, but you could see small caps leading the way. So high growth stocks are often smaller stocks, and I can tell you that the stocks that I follow had just a fantastic week last week. You could see the buy list over 3%. If I want to see, let's just look at a couple of these. I don't need to look at them all today because I think I'm a broken record already. Here's what strength looks like. Here is the S&P 600. Let's just take a look at, we'll use this to give you an idea of how much these things have moved up. From the low, green candle low here in November, to the closing high on Friday, you see a 27% increase over 119 periods. Sell in May and go away, well, maybe it's the back half of May. If you just look at what's happened since the beginning of May, we had a sell-off on May 1st. So if you bought the market at the close of that day and held on, you'd be up 6% in the last 7 days. But what a huge run-up on small caps. If we look at the NASDAQ, for example, you see the same type of a thing. And last week I said, will we break out above this, or 2 weeks ago, and run up, or will we trade back down to the 50 and see if we can hold there? And obviously we've taken off. And frankly, I also talked about how we might see the market shift a little bit in its growth curve. And I think we have. I think you've now seen the trajectory increase, and this is probably on the road to a top. But I don't know when a top is going to come. Do you know? I have to buy based upon the market I have, not the market I think I have. I like to let's take a look at the Dow Jones. I mean, probably a little weaker here based upon some of the other things that we saw. The weak being just probably going sideways up here. It too broke up about, these are things we wrote last week about whether the market breaks out and holds, or do we trade back down to the lower trend line. And you could see it too broke up. Everything looks bullish. It's hard to say anything not bullish about this market, except it's been bullish for a long time, and eventually it's going to stop. Here's the NASDAQ 500, and we have not seen that pull back to the 200, which is what I was concerned about someday getting. And what we had was a 8% pullback into November and a series of pullbacks in the 3% range, only 1% here. So are we going to a blow-off top? I don't know. All I know is I've been making a ton of money being long, and I hope you're long as well. Not to say there haven't been opportunities. I did what I call a George Lee play. Not that you would ever make the trade, but I bought some rack space puts, some $45 puts, which were several dollars below the price of the stock going into earnings. And I did that because many of the other cloud-based stocks just blew up after earnings. And I was able to close out the puts I bought for 70 cents for a little over $6 on the day that earnings came out, which was a one-day hold and a 10-banger return. So that was pretty cool. The 10-banger return in 1 day, that's the George Lee trade. Maybe a silly trade that I made, but I'm pretty happy. If I looked at industry groups, we see there's 146. I want to look at what's moving right now. 76 of the 146. I think that number actually has come down some. Make sure I got my raw combo. Down groups are only 3. So, and I'm just going to look at these right now. As I did my big chart review, and I look at 500 stocks over the weekend, I noticed no refiners made my list except for CBR, and it wasn't setting up for a buy. And there are very few oil, gas, drilling stocks or services stocks. Banks also, the big banks had some weakness, and no shocker, those are the 3 that have negative groups. On the positive groups, we'll skip this one, it's semiconductors. Yep, those look about what I saw. Just take a look at some of these. So First Solar, you know, the solar stocks have made a big move. I like a couple of these, so I'm going to actually go through a couple and comment on them. Just in case we're going to need it, let me open up my MarketSmith and get my fundamental tool ready. And you know I use this to look at earnings further out. I really love HGSI for everything else. And maybe something that can be done with HGSI over time is to add some additional years worth of earnings. Not that they don't do a good job, they just don't have what I'm looking for. All right, so that's sitting here. So First Solar came out with earnings. You know, whenever you see earnings per share, this is a turnaround stock from losing money all of a sudden making big money. And you can see it's taken off. This has been a sector that has been just destroyed over the last couple of years. Too much supply, some high-profile bankruptcies, government subsidies because it's too expensive. I think we all know that someday solar is the right answer. And if they can get solar power down so it's not much more expensive than gas, natural gas, coal, or oil, then it probably becomes a very big standard. We're not there yet, but the stocks are certainly looking that way. First Solar, clearly a leader, probably not one that I'm going to be buying, but that's probably a mistake. getting up near the top of the high jump. Love this earnings per share, and I'm going to probably, let's take a look at, just out of curiosity, before I say it's one that I'm not buying. I haven't bought it yet. I know my buddy George Lee has been making money on it, which I should kick myself in the butt. Still losing money, but it trades at a multiple of single digits. Used to be a $200 stock. I think most stocks trading for $3. You know, there's probably growth opportunity in this stock. I'm just not ready. I'm not a believer yet. NVIDIA had a big breakout on Friday. It makes money, pocket pivots, so you could have bought it intraday on Thursday. If you monitor pocket pivots intraday, you can see the big volume coming into the stock. Came up above, had a squeeze back here 2 weeks ago with a couple of kahunas, could have been a buy signal. Probably too far right now, up near the top of the high jump bar. Might look to see this come back a little bit. Micron Technology, nice lower left, upper right. You know, to prove that I don't know anything, this is a stock that I've watched come up and I've been reluctant to purchase based upon historical. It's been a problem child, and I've lost money every time I've bought it, but maybe it's time. And a lot of people think that technology stocks may lead the way up. It's a turnaround play. If it makes money in 2014, it probably is worth more than it's trading at today. Trina Solar is another, this is a solar stock that I did buy, so I did not buy into First Solar, but I did buy back down here, hoping that with a clear reversal signal here and strength coming in the market with Eureka, that maybe I'd be buying something on the cheap a la 2009 March and make a little bit of money on it, and I have. Not sure how much further I'm going to hold it. No earnings per share growth, loses money. And then Intel, I mean, starting to get some Intel haters in the press, but Intel does make money, although its earnings per share growth is slowing down. It's in a nice move. Here you can see the group strength pulling it up, and I believe it pays a small dividend, not so small, 3.7, ROE of 20.86. Right now, it's a stock that's it's a positive stock. And here's one that I liked and one that I might be buying this week, NXPI. And let's just take a look at its fundamentals here, NXPI. It makes a ton of money. If it keeps the 12 and makes 3.5, that's $42. It's a $30 stock. It has pulled back some, so it's a pullback, ready to run, with a pocket pivot coming in, breaking above the 50-day moving average, hit a DI cross here. Everything on my momentum indicators are green, and this is one that's on my buy list. So semis are handle, about to run. You know, they're cheap stocks except for First Solar. First Solar is clearly the leader in the industry. You start to see a bunch of solar stocks up by the top. You got to probably ask yourself, maybe I should potentially going to take out. If it trades up, it'll take out its highs from back in March. You can see everything is green. It has a lot of revenue, and this is one where, again, sometimes you need a second source for earnings. And we both use bar chart, HGSI, and I believe, I don't know if MarketScan uses bar chart or not, but they look out further, and you can see huge earnings per share growth. I think this stock is at an interesting part as well. Looks to me like it's going to break out here. So, not that I know anything. Semiconductors at the top with lots of interest. People would like to see semiconductors lead. They might be one of your leaders. Toyota has been kicking butt and is probably still near the top. Winnebago and Tesla. We'll look at them and Toyota real quickly. Tesla, big this week with some Bible gap ups and pocket pivots. Certainly was a Bible gap up. I'm not sure when it gets too extended. You had kahunas, tons of volume, big move up. I think to continue the signal, and I didn't get into it, was when it traded above the Thursday close on Friday. Tons of volume coming in. They turned profitable for the first time. Probably not for the light of heart. Toyota, as I said, run up as the yen gets weaker. They get more attractive. It's a very gappy looking chart when it comes up. Hello, there it is, because it's an ADR, but it's had a big run up. I like Winnebago and I like it because it's pulled back, and it failed 1, 2, 3, 4 times, finally broke above the 50. DI crossover, group up. This is one that might go from here. Certainly be nice to set my stop a little bit below that 50-day moving average. And if I look at Winnebago, although it's hard to believe people are buying these things with the economy the way it is, you could see huge earnings growth coming into the stock. Trades at a PE of 26 and growing at 260 times this year. To me, that's a compelling argument to get into this stock. Next group, this is what top-down investing is, going one at a time. Big Pharma, didn't see a lot that I liked on my review, but several of the ones that were attractive, Warner, Chilcott, Actavis, Questcor, we'll take a look at them. This is being driven, I think, by, here's a stock with a 50-day moving average volume is I think 4 million. Let me look at that real quickly. Is 4 million, and it traded 50 million shares. This is an Irish drug maker that has had Actonel go off patent ex-US. Its U.S. sales growth is non-existent, but it makes a lot of money. Trades at a multiple of 4.4, and this is after a big run-up. I bought it at end of December off of here when it got above the 50-day moving average with the Kahuna and the Eureka. Actually, I bought puts on it, and the puts behaved well, and I own the stock. It jumped up on Friday because of some takeout rumors with Actavis, which used to be Watson. When you see a stock, let's pull it up here. It gets no respect from Wall Street. $3 of earnings, multiple of 4. If you're a stock company that gets $10 multiples, it's worth a lot more to you than it is to the shareholders at $18 a share. So this is a leader. Now, a lot of science have gotten in this. A bunch of pocket pivots, a squeeze here, and it broke above the squeeze with Kahuna's back here at $14.25. Straight run and then a exponential run there. That still looks interesting to me, and we'll see what happens. Actavis is the old Watson. First, this one got nibbled on by Valiant, which, by the way, looks pretty good right now to me, and I'll show you that one. And then Actavis went, and that deal seems to be unstalled, and they put in a bid for Warner Chilcott, and all the analysts said, gee, you're trading at a multiple of 19 if you buy a company with $3 of earnings, and they have a multiple of 4. That's called a discount to your growth rate and your PE, and so they got a big boost on that news of potential acquisition. Questcor is a stock that I've grown to hate over the years. It is a single play drug that they mark up and mark up and mark up and mark up. The short sellers kill it. Every time it seems to have a nice run, but it looks like it's got another nice run coming in. You can see the group strength is super high. Got above a squeeze here. Looks very nice. It's got earnings per share growth rate. Like I said, every time it has a nice run, the short sellers come and knock it down like one of those whack-a-mole things. So I would buy this thing at great prejudice and be very careful. Let's look at Valiant. Valiant, to me, is the perfect place to buy. Now, the stock got weak when there was concern that it was going to buy Actonel, or Actavis, rather, the old Watson company. But it's pulled back to the 50-day moving average. Still green on a daily bongo from this pullback. But you had a pocket pivot and volume come in on Friday. Stock trades at a multiple of 16. And unlike a lot of big pharmas, let me see, it doesn't pay a dividend, which is a negative. But unlike a lot of big pharmas, VRX, they have a good currency in their stock. It's a multiple of 16. You can see the earnings per share coming into this stock and the growth rate. It's not overpriced at all. I think this stock has a leg up in it. I like when they go sideways, the 50 catches up and they can run again. And then the other one that I liked here, is Jazz. And Jazz is one that I've liked several times. It's It's another one that's kind of like Questcor. It gets knocked down on news all the time, concerns about patent expiration. But the reason why I like Jazz is this earnings per share growth. Now, at some point, that earnings per share growth won't be enough. But right now, look at this growth, 20-some times, has a multiple of 10, and it's got, you know, if it keeps the 10 on 751, it's a $75 stock, of almost a 20-point gain from here. So a lot for me to like in the big pharma sector, although not the traditional pharmas that people like, such as Pfizer and others. They seem to have dropped down. Biotech, Regeneron, Theravance, bunch of nice stocks here. I think you know what I feel about Biotech. Last week we talked about Regeneron. I think we put on our buy list, and Regeneron had another big takeoff. 2 weeks ago it was on our buy list when it came close to here. Ran up here. It looks like it wants to run again. This is a stock that you wonder if will ever stop going up. It's still a relatively cheap company, $6 billion, I think. Excuse me, $26 billion market cap. Multiple 54. Growth rate is pretty exhausting here. When its growth rate starts to slow, it will come down. One of its big competitors for their eye drug had a study problem, and it's either not going to come to market or is delayed, and that's what drove it up this week. Looking at the top of the list, I don't know much about Theravance. Nice pullback, big pocket pivot. Kahuna, huge volume on Friday. It must be on some news because it doesn't look like they make money. So I will always go to more info from the web. Maybe we'll look at FinViz and see if we can find anything. Okay, they had a drug in partnership with Glaxo that got approved. Well, probably, well, I'm not going to say it's too late, but most of these biotech stocks in the last year, Medivation included, they run up until they get approved. What else we got here? Celgene, it's getting expensive, but it continues to run like the Easter Bunny. It had a Bible gap up on Thursday, excuse me, a DMI cross on Thursday, Kahuna on Friday, breaking out again. I think it runs up to 140. It's my target. Alexion, one drug, $380,000 per year per patient, but it's considered great value because it makes a huge difference in the lives of the patients with no generic competitor in sight. You take it for life and you don't develop resistance. It may be time to go test the water again of this historically great runner. We look at a weekly chart, you could see what a great runner used to look like. Falling on hard times, but maybe those hard times are over and maybe it's time to start nibbling. This is the season of biotech. The next one on the list is Vertex. Ran up high on some news from some CF drugs. Here's your flag. Does it run again? It might. I'd be watching this one closely to see if it takes off. It doesn't make any money. It's all on news and hype. We looked at Regeneron. Myriad has just came out of the prostate meetings. It and Genomic Health have some very interesting prostate plays trying to reduce the number of unnecessary surgeries. Both got a boost. Myriad also has some important legal issues about whether or not they can patent products of a gene, and should be interesting to see. A lot of strength here. I think that's let me just point out Pharmacyclics. You got ASCO coming up in June. Every time there's a major scientific meeting, people remember this company. I love their drug. I think their drug will be a blockbuster. I like to buy this company on pullbacks with a signal, and there's my signal, a DI crossover, positive day, and a Kahuna. I'm going long this stock. I'm interested in going long if it trades up on Monday and the market's up. Next group in our top-down investing computer hardware, you know, and this is probably another one of my interesting plays. I bought this one when it got hammered. I bought some 30 calls off of this 200-day moving average thinking that it wouldn't go lower. And those calls expire soon, and I'll probably buy it into stock. I think that the 3D printing is going to run again. It had its pullback. I think this is a big future story of technology. SSYS and X1 report on Monday. You can see the deep pullback here. Unless they blow up, I expect VDD to continue to lead. Pocket pivot on Friday, everything is green, huge volume. I think this goes, at least takes out its prior highs. You can see the earnings per share growth rate is nice. It trades at a multiple a little bit higher than its growth rate. Dell, garbage. I mean, it moved up on some icon comments. I don't know what to say there. And BlackBerry's had a nice run. It's going to run again. I don't know. I'm not a big BlackBerry fan, but I do like those earnings per share growth. All right. I'm going to go back there. I also like Silicon Graphics. I like undervalued stocks in uptrends, perhaps especially those that have pulled back a little bit. So here's a stock. If we look at a weekly, it has been an uptrend since May of 2012, going from 6 to 14. Clearly has pulled back pretty severely here, but it looks to me like it's running again. Everything is green. Why am I a sucker for SGI? Or why do I have interest in SGI? Because those who've been here before know I like to buy growth at a discount. And here you got 100% grower. The PE is high here, but this is a turnaround stock. This is a 50 PE on $32, less than a 50 with that growth rate. And you can see the growth rate in 2014. I think this is a $20, $22 stock in the next 12 months. That's a big move from here and one that I'm interested in picking up. All right. I'd like to look at the top 10. I've got about 20 more minutes before dinner. Internet retail, change index group, Priceline. You know, for that, God bless you. I wish I would have held it longer. But Priceline is clearly the leader in this group, and I think you all know how it's performing. You know, when do you stop buying Priceline? Pocket pivots 2 days in a row, everything's green. Kahuna, huge volume, huge growth rate. This is just a monster stock of our lifetime. I guess this has taken over the mantle from Apple as the big leader in technology, this and Google. But you look at this, it's really breaking out of what's been a sort of a shallow cup, maybe a handle, and running. It's an $800 to $900 stock. I love it. Multiple 22, growth rate is high. I think the stock has room to run. Netflix, you know, this is another George Lee. I think he made 100%, I mean, a 100 banger on this one, buying some out-of-money calls prior to this earnings jump here, or actually the earnings jump here. Going sideways, moving averages are catching up. Everything's green, great earnings per share growth, probably setting up again. This is a very strong market. We'll look at system software. Haven't looked at Oracle in a long time, up 2%. It's a volume story. The next one was a big movement, which was quick at those two. So here's Oracle. Pull back, got above the 50. Not much earnings per share growth, not really my kind of stock. Quihu, big growth rate. I wish I would have bought it off these pocket pivots off the 50 or this Kahuna. It's a little late for me. Chinese stock. Anything else that looks interesting here to me on the longs? Bunch of apparel retail stocks made my list. We'll look at the. I own Gap and Francesca's. I mean, a lot of retail stocks were on my list this week. Here's Gap breaking out here. I'm not sure why it's not a Bible Gap up. Maybe it's got to do with ATRs, good volume, Kahuna, pocket pivot. Came out, increased the same-store sales growth and its earnings projections. Very bullish looking. Michael Kors, is it ready? I mean, this is a stock that had a great run-up, had great earnings, and then did a secondary and got hammered. It looks like it's running again. You know, there's a lot of other luxury stocks that look good, great earnings per share growth. Let's go out here and look at Kors. I don't own this one, but I might want to own this one. You could see 30% grower, 244, PE of 35. I think this is an interesting looking stock. 35 times 244 is 70, 80-some dollars. So you could have a 20-point run in Kors. I have Francesca's. I should have sold it before. Breaking out here, when I see 3 Kahunas in 8 days, a pocket pivot, a DMI crossover, I think this is the beginning of a run. And you can see the earnings and revenue going up. All right. Anything else? And then the other, I mean, there's a lot to like in this market. I own Las Vegas Sands, and I own MPEL. MGM came out higher rated on this, but looked to me like Las Vegas Sands wants to break out. It's had legal issues, it's had China issues, but it's doing well in Macau. Holding I've had for some time. That one looks very compelling. Look at the earnings per share growth. As you look through this market, there's not a lot of places that have great earnings per share growth. Home builders and casinos are some of them, and you can see here it's going to diminish, but 27 times 3 is 60. That's about $80 stock, trades at 55, so I see growth potential there. The other one I own is Apparel, which is a total play on Macau. And you can see it's had a nice lower left, upper right. Perhaps it's going to have earnings coming in. Other strength places I liked here. And again, there's a lot to like. Home builders, you know, I've been into home builders for a while. Right now I have Pulte and I have KB Homes. Down here, both of which are doing well. If I had to buy one, and I might switch into them, I think Ryland is interesting because of its fairly phenomenal earnings per share growth. Look at these numbers. This was a turnaround, as is KB Homes. Huge growth rate, lower left, upper right. Getting extended, as is the rest of the group. And the other one I liked was DR Horton. Why? Because this one's shown its feathers. Its feathers are it beats its earnings big time. It's got some earnings per share growth rate. Might want to let it come in a little bit. Boy, is there a lot of strength in this market. All over the place. So what else did I do? I did my group inclusion filter, looking to see where the strength is. Lumber Liquidators, Hertz Global Holdings. We'll take a look at those. Regeneron, Fleet Corp. These are the stocks where I saw the best strength from a more bottoms-down approach, where I looked at how often they occurred in the different smart groups. So I like to look at those. So let's do my warehouse view. And I have the top 30 of those. This is called a group inclusion filter. I've demonstrated it enough. I'm not going to go through the dynamics of it today. But you can see from my little spreadsheet where these little guys end up. And this is almost a weekly where they're up near the top in performance. So these were up 3.22% last week, 3 times the market. These are the stocks that I found on my, I call them my GIF All Stars, and there should be 30 of them. So let's look at these real quick. And then I'll look at my buy list so you can see if there's anything that I didn't talk about, and then I'm going to say goodnight. Lumber Liquidators, earnings came out here, beautiful run. At some time, this thing's going to slow down. Its earnings seem to come to hit a wall next year. But you know what? That's a year away. Great mover. I'd rather buy it off the 50 than up here when it's extended, but certainly a leader. Santoris, this stock did something very strong on Friday. The pocket pivot should be painted blue. I don't know why it's a pocket pivot down, because it was an up day based upon open to close, but it was down for the day. They came out and priced at $18 a second, or $18.50. And how these companies perform after they come out with a secondary should tell you a lot. So let's take a look at Santoris. You should never do things on a webinar that you haven't planned. So let's take a look at Santoris, SNTS, and let's see what happened. So here's the open on the 10th, and they announced the secondary, and it opened down here, which was the price of the secondary, and it traded up the rest of the day. So putting 25 million shares, whatever they put in, at a deep discount, and the stock closed down 9 cents for the day when the discount was over $2. That is a very strong stock. This has been an animal. Let's take a look at it in one of my favorites and one of my current holdings. Makes money, trades at a good PE, but keep the 35 and give me $1.28, and it's trading now at $20. It's a $42 stock trading at $20. This stock continues to run unless somebody buys them. Love that stock. Regeneron, we've already seen it. No need to talk about it again. NSM and OCN both broke out last week. You could see NSM last week. I should have picked it up over the weekend where it broke above the 50 with a number of pocket pivots. Earnings came out off to the races. Everything is green. A Bible gap up on the beginning of the week on Tuesday and Wednesday. Love this. Great earnings per share. Same thing with OCN. We already looked at Toyota. Interestingly, a bunch of education stocks were breaking out this week. This one's extended. You can see it to the top. And I can tell you that this one, Apollo, Learn, all made my screen. So I think we're seeing some sector rotation into the education stocks. This one doesn't have great earnings per share growth versus its multiple. I'm more interested, I think, in Apollo or Learn, and we'll look at them before we say goodnight. 3D Systems, we saw that on our top down. Love that one. Multimedia Games is another casino stock. Beautiful. Looks like it's running again. I like more earnings. That's why I like Las Vegas Sands. Hertz and Avis are great lower left, upper rights. They are in the trucking industry somehow in our groups, but they are doing well. I would own both. I do. We talked about Qihu, cup, handle, running again. Expensive from a PE perspective. I still don't get SodaStream, but boy, it based from January through May, pull back to the 50, up on kahunas and earnings, Bible gap up, certainly something to look at. Great earnings per share growth. United Therapeutics is a drug company. Its earnings look bad here, but when I look out a little further, the earnings don't look that bad, and you could see $7 of earnings times 12 is an $84 stock plus. It's currently 66. It's got some growth opportunity in it. Homeowner's Choice has had a big run up. Of course, I sold it back here when it crossed below the 17. I didn't get back in. Now I made money on it, but I missed the big run up. Huge earnings per share coming. It is a insurance play. Celgene we already talked about. Ryland we already talked about. Moody's, the bond rating company, I think they had fell back here when there were some questions about litigation. They've settled here. I don't know much about the stock, but it's a lower left to upper right. Here's ON Financial, the other one like NSM, breaking out to new highs, had a Bible gap up on Thursday, great earnings per share growth. Illumina popped up on Friday with a pocket pivot. Now, a lot of talk about potential bid from Roche. Roche says no, but this stock's been an uptrend since March and had a kahuna here breaking above the 50, above the 17. Pocket pivot here. This might be a late move, but huge volume coming in. Interesting to watch what happens there. Cree, the LED company, late in its move as well. Great earnings per share growth. Big move here. Not all the way up at the top. Dorman Products. I think it's a paper company. Let me see. Auto parts company. You know, there's some auto parts companies that are moving. I'll show you my favorite in a second. Bunch of pocket pivots. A kahuna back here off the 50. This was the buy point. Missed it. Everything is green. I'm not in love with its earnings per share growth. Cabela's, the retailer that sells all the guns and the ammunition, just keeps humming and humming. Every time I drive by one on the road, I'm shocked at the number of people there. Certainly a leader in that. Green Mountain Coffee inked a new deal with Starbucks, popped up here. Now, did somebody know what was going on here with all these pocket pivots in the stock, BMI crossover? It and Netflix seem to have come back from the dead. FleetCor, a gas card company for the trucking and other fleets, pulled back a little bit this week. I'd be looking for a kahuna or pocket pivot before I got back into this stock. The medicines company, this is a Fred Richards stock. He talked about it in March. Don't you wish you would have bought it in March, Jeffrey? Yes. It is another drug company. It doesn't look that exciting in the next 2 quarters. But when I looked out, I know why Fred owns this stock, because the stock is an earnings monster. And you could see bad quarter in 13, and it really turns it around in 14, 18. You know, is it fully valued? It might be fully valued unless it gets some margin expansion. with the growth rate increasing. Lithium Motors, you got to sell those cars somewhere. That's one of the roll-ups of car dealerships. GameStop, a lot of the game companies look good. I'm getting lower on that GIF All Stars, so I'm going faster, plus it's near the end of my time. Financial Engines, I think they sell information to the mutual fund companies. Investment advice. Paraxel, Clinical Research Organization. All these stocks are lower left, upper right, big leaders, lots of pocket pivots in that one. And whoops, wrong way. And Alaska Air, which is one of the leaders in the airlines. I own Delta, but this has been a beautiful mover as well. And then lastly, in the GIF All Stars, LinkedIn. I think this is a short, not a long. I think this guy needs to come back and visit its 200-day moving average, which is a 50-point move. I don't expect to get that. I'm looking for this one to trade up to the 50, which will give me a great place to buy puts. I just think LinkedIn is slowing down considerably and disappointed the market. So that was a group inclusion filter, just the top 30 stocks. All of them are certainly the ones at the top look good. They've all got positive bongos except for LinkedIn, which is the one I said I would probably short. Take a look at my buy list before I say goodnight. These are the stocks that I liked. We've looked at many of them. Let's see if there's any comments I want to make going through. All right, so I talked about some of the education. So 1, 2, 3 education stocks, and it didn't have LOPE. And then, yeah, so that's right. It's not Apparel. Apparel is something else. So these are the leaders to me. Apparel retail, we saw those on our top down. I liked as new buys Coors, Gap, Ascena, Aeropostale, and Coach. Biotech, Celgene. We looked at all these. I think that Gilead might be the one to buy. It's pulled back to its 50-day moving average, actually 17-day moving average, and it's held here in the past. It's got earnings coming in. Let's take a look at Celgene, at Gilead rather. This is my Celgene for this year, I think. Great hepatitis and AIDS franchise going to get into oncology. You see the earnings per share coming in. I'll take 27 times 290 is about $85. It's a $50 stock. I think that one looked interesting. I thought all these things looked interesting. You see my home builder choice of Horton and Ryland. Standard Pacific is a cheap one. We looked at Activist, Jazz, Questcor, Santeris, Medicines, Valiant, Warner's, Chilcott. We looked at both Freescale and NXPI. If you want a true bottom fish, if you want to get into steel, ArcelorMittal looked interesting to me, but mostly on chart pattern. It has pulled back. It broke above the 50. Next stop for me is the 200. Pocket pivot, DI crossover, mostly green on the momentum indicators. Clearly that's a bottom fish. I also like to categorize these. And let me open up my weekend review. I break out EPS All-Stars, also include URI. I talked about last week. These are my extended leaders. These worked this week. Pullbacks ready to run. These are my favorite place to buy from. We looked at many of those. Let's take a look at Skeechers in a second, SKX. Pullbacks waiting for that pocket pivot to come in or that kahuna. Bottom fishing. They're what I say, bottom fishing. Buy at your own risk. They're not HGSI stocks, but I've made some money on some of these. And then Warner Chilcott, my special situation. Let's look at Skeechers and then my favorite auto parts, and then I want to say goodnight. Then a couple of comments about what I do with this list. So Skeechers, it's gone sideways for a while. That's a reason not to get into it. Everything has turned green. Bullish day on Friday. Big kahuna. Look at the earnings per share growth coming into this stock. SKX. If this market goes up, this is a turnaround play after 2011. 40 times $1.39, 20 times $1.39, this stock goes up. If it makes its earnings, the stock goes up. Huge earnings coming into the stock. I love turnarounds. Then the other turnaround play is American Axle. If you want to get into the components of car manufacturing, what a nice run this one has had. I own this one. Truth be told, I've owned it for a long time, and I got my shirt handed to me. But it's clearly seems to be in a nice move, breaking out to all-time highs. And why do I like Axle? You might say earnings, and let's just take a quick look-see. You can see the earnings per share coming in. I'll take a multiple of 20, $1.75. That's $35. It's a $16 stock. On that note, what do I do with my watch list? I picked 40, 50 stocks I want to buy. I'm not buying all of them. I'm going to stick them into my 2 trading programs. I'm going to stick them into TradeStation, where I'm going to be able to monitor them throughout the day, looking for various signals and moves. I put everything into a large buy list, which is here, and I'm going to be able to scan looking for pocket pivots during the day. I can look for Bible gap ups. These happen early, and this is where I put my money. The other thing that I do in trades in Thinkorswim, I will go into Market Watch, and I will switch it to my personal, put it in my buys, and I'll put the new ones in, import file. The beauty is all these programs, it's so easy to go from one to the other with some of the different lists and make sure everything's got the same things. I'm going to look for the buy watch. So I'm just going to put this week's buy watch in. And I have a program that will look for institutional volume. And I can see that on Friday, there was institutional volume in all the ones up until Santoris, including Santoris, no, up to Santoris. I can see institutional selling, don't want to see those on a buy list. And what I'll do is I'll scan these during the day, looking for evidence of institutional volume coming in as another clue. I also put a lot of provisional purchases in based upon what the market does and what the stock does. And that's, for example, let me pick one that I'm interested in. I'm interested in DSX as a bottom fisher. So let me go back and look at DSX. And this is a great feature of Thinkorswim. So I'm going to look at DSX. And I've been in and out of DSX, so I know DSX pretty well. My target's about 14 bucks. So it closed at 10.03. My target is 14. So now I'm going to go into the trade. I'm going to put DSX, and I'm going to give it a couple months. I'm going to look at September $10 calls. Okay, for $1. So I'm rolling the dice. I think this goes to 14. I'll pay $1. I'm going to go down here. I want to buy, let's say I'm going to buy 60 calls. My limit price is $1.05. And I only want to buy it if it trades above, say, $10.13. So I've got an order here. Buy 60 DSX, $10 strike price for $1.05, and it's got to trade above my condition, above $10.13. Mark at or above 10.13, and we hit OK. And now I've got an order in to buy it if it takes out my order but I've got a limit order that says I'm only going to pay $1.05. And on that note, I'm going to say good night, because I do travel a lot, so by the time tonight's done, I'm going to have about 10 of these built in, many of which will never get filled, but they're all contingent. If the market gaps down tomorrow, it's not going to trade above 10 to 13. It's going to trade down. I'll never get filled. If it gaps up, I won't get filled either, but I don't necessarily want to buy it if it gaps up. And at that note, I'm going to say good night. Good night, everybody, and have a great week trading. And, of course, I went beyond the time I said I would, which means bad husband on Mother's Day. Good night, everybody.